Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just finished up our interview with Stu Grazier, co-owner of Storehouse 310 Ventures and active duty Navy pilot. And man, Anthony, what were some of your takeaways here?
You know, it was really with the turnkey provider. I think it can be a great avenue as you're trying to create financial freedom by creating more passive income. And with me in particular, and a lot of our listeners, they're busy doing their own thing, and they may not have the time to find properties, rehab, and manage it. With the turnkey provider, they do all those things. They find the property, they rehab it, they find a tenant, they sell it to you, and they manage it. It's kind of like all wrapped up in a bow. So I think that this is a good episode if you're looking for ways to create passive income and you don't have that much time to put into it. What about you, Cam?
Yeah, actually, the part that I liked was really how they got into it. They were into it as individual investors first, him and his partner, David, his co-partner, David, and they owned him first. And to be honest, he shared that they had a bad experience. And I actually enjoyed him sharing that, because I think in every industry that you can find kind of some bad apples. Even in our industry is right. There's some people that are unethical and whatever. Right. So it's good to know that that's one of the driving forces behind their business is, man, they had a bad experience, and really what they want to do is put a good product out there and run an ethical business with some integrity. So I enjoyed the conversation.
Yeah, it was good. And I think you will too. Enjoy this episode.
Take care. Stu, welcome, man. We are happy to have you on the podcast today. If you could just start and tell us a little bit about your background and a little bit about your business model, and we'll go from there.
Yeah, well, thank you both for having me. It's quite the pleasure and the honor to be on here. You guys have a great podcast and really appreciate it. My name is Stuart Grazier. Most people call me Stu, and I am the co-owner of Storehouse 310 Ventures, which is a turnkey real estate company hubbed out of Milwaukee, Wisconsin. I'm also an active duty Navy pilot by trade. That's my full-time job, I'd call it. And then my second full-time job is the real estate stuff. But my business partner, David Gutierrez, he's also a full-time Navy officer. He's in the cryptology intel world. And so we're both at about 18 years of service. And we started this turnkey real estate business about 2 years ago, and been kind of going strong ever since.
Very cool, man. How'd you guys get into real estate to begin with?
Yeah, so we've both been investing in real estate individually for quite a long time. My first little dabble into real estate was right after college. I had moved to Pensacola, Florida to be in flight school, and a friend of mine was buying just raw land across the border in Alabama, and he was telling me about what he was doing, and I was like, "Oh, that sounds really cool. Let's go check it out." And so I just one weekend randomly decided to go over to the Gulf Breeze area of Alabama and met a realtor, and he showed me some property, and there were some vacant lots for sale in a kind of a new development. They were going for, I think, $50,000. And I was like, why not? You know, I have some disposable income. You know, I'm kind of young and dumb, and I'm going to go for it, take action. So I bought this, third acre lot in a new development in Alabama, and put $5,000 down, financed the rest. And about 3 months later, a huge hurricane came through and wiped out like the entire area. And I was a little devastated. I thought my investment was completely ruined and gone. And I continued to pay on the mortgage and was just kind of hoping for the best. And about 9 months later, after I invested in it, there was a lot of revitalization. The thing was kind of coming back, and the same realtor that I bought it from reached out to me and said, "Hey, your lot is the last one in the development, and someone really wants to buy it. They're making you a cash offer of $95,000." And I was like, "Sold."
Okay, good.
Yeah. It's like, I love real estate.
Exactly.
So that was my first experience. Pretty much doubled my money doubled the investment in the span of 9 months. And I took that profits, and then I put those right into I got done with flight school, moved to San Diego, California, where my first duty station was. And that was in 2005. And I went and bought a super expensive house in San Diego, at the very top of the real estate market. And we can go from there as far as what happened next. But the crash happened. I ended up like living in the house for 8 years while I was stationed in San Diego.
Okay.
And did the whole like house hack thing. I had roommates that were paying rent. I had a dude living in the garage down in the basement paying rent on a mattress. And so essentially we were basically living for free in the house, with all the other renters. But that was kind of my first, couple deals in real estate, and kind of got me learning and got me interested in it more. And I've just been kind of learning and going ever since, and dabbling in a bunch of different niches of real estate.
Cool. Tell us about Turnkey, how you got into that niche.
So Turnkey investing started as I was kind of after the land and the deal in San Diego. I started learning more about it, and I initially started doing lending, which is kind of the kind of bass backwards from what you. Yeah. So I'd go on a deployment, I'd save a bunch of money. I was saving a bunch of money from all my roommates paying our mortgage, and I connected with a guy in the Dallas-Fort Worth area, which is initially where I'm from. And I started lending on some rehab deals. And so I started getting into lending. I started accruing some mortgage notes and doing the lending thing. And after a couple of years, I started finding that my taxes started to increase drastically.
Yeah.
And so I realized that I got to do something else besides just this lending, because there's not a whole lot of tax write-offs when you're just lending and owning the paper. So I reached out to my CPA, and my CPA was like, well, you basically just need to start buying property. And so you can kind of offset, the income from your mortgage notes and your lending. And so I started looking into the turnkey model, because I thought it was a really good model, especially for, active duty military. We're super busy. We deploy. A lot of us in the Navy, at least, we live on the coast, so it's super expensive. And so the numbers typically don't work in some of those higher price markets. And a lot of these turnkey companies, are in the Midwest or, in the Southeast, areas where there's a lot better of a cash flow. And so I found a company in Birmingham, Alabama, and I ended up buying 4 single family homes through this turnkey company. And while all that was going on, my business partner, David, was, in a similar situation, and he decided to buy in Milwaukee, Wisconsin.
Okay.
And he had used a turnkey company hubbed out of Chicago, Illinois. And he had a really, really bad experience. He used the company that he used. He ended up threatening to take him to court, file a lawsuit. Their model was of such that you had to basically buy the house and pay for all the rehab costs up front prior to a rehab even starting. And so you were basically trusting this company. You're giving them all this money, and they'd send you like what they were going to do to the property and everything like that, but you're basically paying for it all up front. So there's zero risk for them, and you basically pay for a water heater to come in and put in, but they ended up not putting a water heater in, and so they were just pocketing money. And David, caught them in this kind of a really, really big lie. And so it was just downhill from there for him. And he ended up having to fire everybody, find new people, really just out of dire necessity, to kind of get these projects back in play. And so that's what he did. He ended up finding a bunch of people there in Milwaukee. His wife is from Wisconsin, so they travel there every now and then. And so he ended up building a team kind of out of scratch, out of necessity. And that's where kind of our conversations got started with this whole turnkey idea, because there are some bad turnkey companies out there, and turnkey can have kind of a bad connotation to it. And so we like the idea, we like the model. but we just wanted to make it right. And we love the idea of helping people and serving and educating. And we know of a lot of our military brethren um, like the idea of investing, but just don't know where to start. And so that's where we kind of came in and said, hey, let's make a business. We both know how to do this. We've been both doing it for a long time. Let's start a company and let's do it right. And let's make all these things that we don't like about this model. Let's do it the right way and put, integrity and honesty first and foremost. It's not make it about just the bottom line, and really more about, the education, the serving, and helping other people kind of get into real estate by using this turnkey model.
Awesome, man. Thanks for sharing that. Is one of my questions for you was what set you guys apart, but I think you really just hit on it right there. So thanks for sharing.
Yeah, and that's, that above anything else is the most important thing. Just that honesty and integrity, and always being forthright and telling them what's going on. Because stuff happens. There bad stuff happens in real estate, and we say it all the time, but bad news doesn't get better with time. And so that's the most important thing that we're going to let our investors know is if stuff starts to go wrong.
Awesome. So now you guys, right? So David's there. He's in Milwaukee. His wife's there. Tell us a little bit about kind of Storehouse Ventures now and what you guys are doing. So you guys are in the Milwaukee area or the market. Is that correct?
Yeah. So the business itself is in Milwaukee, Wisconsin. David is also active duty Navy, so he's not there. He's currently stationed at Fort Meade in Maryland, and I'm stationed in Denver, Colorado. And so we built out a company. We have a full team that's there in Milwaukee, Wisconsin, and we have our realtor, our project manager, our acquisition manager. We have three separate contracting crews that we manage. And then we partner with third-party property management companies that will take over as the property managers after we rehab the properties. So we go in, we find the houses that need a lot of work. We'll buy them at foreclosure or auction, and we're on a list of a lot of wholesalers that will send us deals, kind of priority deals, and we'll buy them, fix them up. We want to make sure that all the major systems in a house are up to date. So that way, the investor doesn't buy it and right afterwards, they have to put a roof on or something like that. We want to make sure that all those major systems are up to date. And so we do pretty major rehabs. On a $50,000 property that we buy, we're going to put another 25 to 30 into it.
Okay.
And all new flooring, kitchen, baths, paint, HVAC, furnace, roof, everything that's needed, we're going to go ahead and do.
Okay, so you almost just answered my question, right? Because one of the biggest concerns of buying a rental property is some of the major repairs, the roof, flooring, and the AC unit. So what are you guys doing to bring that up? Are they all new, or just how do you ensuring that those will be in good order?
Yeah. So when we initially walk a property, we always bring our contractor to walk a property, and they'll walk it and they'll do a full scope of work. And what we have set in place from day one within our business was if we're walking a house and any of those major systems don't have a minimum of a 10-year lifespan, we're going to replace it. So anything that's, if there's an HVAC unit that's 30 years old, because you can tell, most of them have the stickers on it when it was made. If it's 30 years old, we're going to put a new HVAC in. If the water heater is 20 years old, we're going to put a new water heater in, and vice versa. And that's where we really rely on the professionals that are super knowledgeable in all of those arenas. You can pretty much tell when something is ready for replacement. So that's our goal from day one walking a property, is making sure all those major systems are updated to at least have a 10-year lifespan. Now that's gray, right? There's sometimes like you can't always tell. But what we tell our investors is we send them, as when they first get to identified a property, we send them the full statement of work. So they know exactly what we're doing on the property, and they have that. So, if they buy it and a year later, the HVAC goes out, the furnace goes out and they find out that they need a new furnace and we didn't replace it, we're going to honor that and we'll cover the cost of it and put in a new furnace for them, because that's really important to us.
That's great, because that's important to the investor as well. Is there like a formal warranty?
So we have on our website, in the frequently asked questions, what we cover, what we will warranty, guarantee. And then, if there's concern, if there's something like in that gray area and the investor questions it, we have done written guarantee memorandum of agreement with some of our investors that say if the furnace breaks within a 5-year period, because there's like an example is we had one house where the furnace was 15 years old. And he kind of questioned it, and we're like, hey, you know what? We'll totally back it. We'll write a memorandum of agreement that says, if this breaks in the next 5 years, 10 years, I think it was 10 years, we'll cover a replacement. And so we absolutely are happy to do that.
Okay, cool.
Yeah.
What's typically the size of the house and the age of the houses you guys are buying?
Yeah, so most of these houses are 1950s, 1960s build. The average house is a 3-bedroom, 1-bath, 900,000 square foot. They're C-class, C-plus class neighborhoods, kind of the working class. And a lot of them are in disrepair and in need of a lot of updates. And so we'll go in and we'll make really nice updates, and they'll be the nicest house on the block. And that's our goal. A part of it is really just being able to revitalize an entire neighborhood. We love that idea of just going in and just completely making a neighborhood, nice again.
And when you guys are done renovating, what's the typical price that you guys are that investors buying?
Yeah, the average house is around 100,000. So anywhere from 95,000 to 110 is about our average. And those houses typically are renting for about 1,200 a month is about the average. So, our I guess promise to the investor is, so when we run the numbers, when we decide to sell, we run the pro forma with all the expenses, and we feel like we're fairly conservative on running that pro forma cash flow analysis. We won't sell it to them for less than a 10% cash on cash return. And
okay.
We use,
that's cool.
Yeah, when we run our numbers, we use a 7% vacancy rate, because that's about what it is in the Milwaukee area. We got that straight from the property management companies that we use. That's about the average vacancy rate for all their properties, which is about a month if you kind of do the math. And then we do 5% savings for maintenance costs, because there will be maintenance that comes up regardless of if we just rehabbed it or not. The houses are old and stuff will break. And then we expense 5% for capital expenditures, because down the road 10, 20 years you're going to have to put a new roof on. Something's going to happen, so you need to start saving for that now. We have property management at 8%. Which is the property management company that we use, and then property taxes and insurance based off of the local area. So all that we use as our expense calculations, and after that income comes in, we want to have a 10% cash on cash.
Oh, awesome! Love it.
Yeah.
What about financing? I've had a call or two with you so far, and that was one of the questions that kind of jumped out at me. Can an investor come in and bring their own financing?
Absolutely. Yep. They can use really whatever they want. And that's another thing that a lot of turnkey companies will tell you, like you can only use their own financing, or you can only use their preferred lender, or you have to pay cash only. Recently, a friend of mine said that a turnkey company he was going to buy, it was like a 30% cash on cash return. It was amazing, but you had to pay cash. And that to me is an immediate red flag, because that tells me that they're not willing to get an appraisal done, and they're selling for way over what the true value of a property is, because they don't want to get that appraisal. They don't want to put their name on the line to do that. So, we offer, we allow anybody to use any lender. They can pay cash if they want to, but we recommend actually putting as little down as possible, because you're going to get way better of return on your investment using your own capital. So most lenders will require a 20% down payment on an investment property. So that's what we run our numbers at, is a 20% down payment fixed rate, lending at 30 years amortized.
Yeah, and one thing we've been talking about, well, I mean, as you know, as everybody knows, the government just added $2 trillion or $2.5 trillion to our already blooming deficit. And they were expecting 1 trillion deficit this year. It's going to be more. They're going to collect less tax revenue. So the government is going to have to do a couple things to fix it. One is they're going to have to raise taxes. Two, they're going to have to print more money. Printing more money is going to create inflation. And so what we want to look for are assets that are going to go up with inflation. One of those is real estate. Not only is there special tax benefits for having real estate, but also the appreciation and the rental income should go up with inflation. But the more you get a 30-year fixed mortgage at all-time low rates, it stays the same rate. What I'm trying to do, you guys ever heard that? Well, I forget what movie it was, but I think it was Matthew McConaughey. Was it Dazed and Confused? Where he says, "I like high school girls," right? Because
you get older, and they stay the same age.
Yeah, I'm trying to switch that to getting your mortgage stays the same. But
you are walking a fine line, my friend.
I am walking a fine line. And to be honest, I haven't even seen that movie, but
it's a fantastic movie.
Yeah,
there are some key one-liners in there, so I'm working on trying to mortgage stays
the money gets
same.
The money gets more expensive, but your mortgage stays the same age.
Well done.
We're working on it.
Yeah.
Work in progress.
Yeah, so 100%, man. Like total hedge against inflation by getting a 30-year fixed rate mortgage. I mean, mortgage rates are fantastic right now, and you can get an investment property locked in at 30 years. I mean,
Crazy.
You can't beat it.
Not at all. Let me save Anthony here and try to change the subject to appraisals. You had mentioned just a second ago. Have you ever had an instance when an appraisal came up short? And if so, how'd you guys handle it?
Yeah, we did. It's interesting you asked that question because David and I was telling you before we started recording this, we started doing a podcast ourselves. And this morning we actually recorded a podcast about that exact same, type of scenario. I mean, we totally got punched in the face, the Mike Tyson quote of what do you do when you get punched in the face, kind of deal.
Yeah, everybody's got a plan to get punched in the face.
Yeah, man. So, but fortunately we had a plan and we had talked about what we would do. But, the bottom line is most of the time we've had 3 properties not appraised. And out of the 3, 2 were real close. And so what we did on those was we just dropped the price to what the appraised value was. And, because we don't expect a buyer to pay for a property above the value, right? We're not, and there's a lot of turnkey companies out there that will say, nope, this is the price. If it appraises for less, then you just got to bring more money to the table. And, and that works for people and they'll still do it. And, they're going to get way less of a return on their investment because they're putting way more money into it. But typically, if in the past when we've had it not appraised, we've dropped the price. This one incident that we talk about on the podcast, if anyone listens to it, it's called Filling the Storehouse Podcast. It's just started, but we're going to talk about it on there. And basically, this one, it was a 2-bedroom, 1-bath house, and we decided we were going to do like kind of a value add play and add a bedroom and a half bath to the basement. So we were it's an unfinished basement, and we ended up deciding to finish out the basement and put in another bedroom and a half bath. It did bring a ton more rent than what it would have averaged a 2-bedroom would have brought. And so we did get a great rental in there. But when the appraisal came back, the appraiser only used 2-bedroom comps. And it came back like $20,000 below what we were trying to sell it for. And so we just went back to the buyer, and we just offered him 3 options. Option 1 was, hey, we can't sell it for $20,000 less than what we can't sell for what it appraised at. Like that would kill us, right? Here's all the comps that we used. Here's what we truly think what the value is. Here's what all of our other properties have sold for. Um, let's meet in the middle. Let's drop it halfway between. So we dropped it $10,000 off of the sales price. You're going to get a fantastic deal at a fantastic price for a fantastic rental. Like the cash on cash return on that was like 15%. So that's option one. Yes, you're going to have to bring a little bit more to the table to close on top of the down payment of 20%, but you're still getting a fantastic property. So that was option one for them. Option two was, hey, walk away from the deal. You get your earnest money back, and we'll look for a property down the road. Or third option is walk away from the property, get your earnest money back, and never talk to us again. So he ended up deciding to go with option one. He got a fantastic property. He paid a little bit more than what it appraised at, but in the end, I think it worked out for everybody.
Stu, in that case, how come they did not include the bedroom in the basement?
It's a great question, and we actually fought it. We actually contested it with the lender, and the lender said that his response was, you know what, it's so far along, it's already in underwriting. There's not much they're going to do with it, and so honestly, I don't know. I don't know why the appraiser used the comps that he did, but they were all 2-bedroom, 1-bath comps instead of the 3-bed, and so.
And when you did a major improvement like that, did you get proper permitting? So according to the county, it has the proper amount of bedrooms?
Yes. But with anything, it takes time to get all that, properly recorded and into the system. And so I don't think it was properly in the system yet. But yes, we did.
Tell us a little bit about the waiting list, or how many properties have you guys done, or how many properties do you do typically on a monthly basis or during a year?
Yeah, so we since inception of the business, we've done approximately 50 properties. Okay. And so we've been in business a little less than 2 years. Year one, we started in May of 2018. We did about 14 properties year one, and then year two, last year we did 35 properties. And we're on schedule. If we keep on schedule, we're going to do about 40 to 50 properties this year. So our average is 2 to 4 a month. And yeah, so it's going well so far. We have, like you asked, we do have a pretty decent wait list. We have about 15 buyers on our wait list right now. So if kind of do the math, you're sitting 3 to 4 months out for a property right now.
Okay.
And about that waiting list, what does your average investor look like?
So I would say 95% of our investors are all referrals, and they're all from past clients. And most of them are either still active duty military or a veteran of some sort. We do very little marketing. We don't do really any paid for marketing. Besides, we do pay referral fees for guys if they bring us a buyer. But really, it's just kind of social media stuff. We don't do any paid for campaigns, advertising, anything like that. So it's really all just referrals from past clients.
Very cool.
Now, who's managing these properties?
Yeah, so we've have recommended property management companies that we will basically pass the properties off to, and those were property managers that we used ourselves. So before all this started, David tested it first by having his own properties in the area. He created the team. He used the property management company, and then I ended up being the first buyer. So I bought first in the exact same location where we're still doing deals. And I became the first buyer, and I tested that model out, so I owned it, tested the property management company, and kind of just, checked it out first before we started offering it up to all of our other investors. Because our investors are one of our own. They're military people just like us, and so the last thing we want to do is offer them a crappy product. And so I tested it, and so these property management companies, we used one primarily on year one, and then we decided to find another one, and so we could just offer a little bit more, so give the investor buyer the opportunity to choose which property management company they want. And so now it's just, at the end of the rehab, we turn it over to the property management company, and then they'll take it over and do the rest. That's not our side of the business. We don't want to manage the properties ourselves.
Have you guys seen any effects of this pandemic yet, or do you anticipate any?
I think it really depends. April, I think, was pretty good. Most property management companies, they will pay a month late. So, they'll accept rent checks for March, and you won't get that payment until April. So April payments, most of them came in. We'll see what happens in May. And I kind of think it depends on how long this lasts. If we continue to do this stay at home stuff, and people can't go out and get jobs and work. There's a lot of industry factory type jobs, restaurants and all that kind of stuff that are really hurting right now. And if we don't kind of get that going again, it could have a major impact. As of now, not a huge impact. There's been a few little hiccups for us on the buy-in and the rehab side. We had, so back to kind of the appraisal process, there's been some appraisers that haven't wanted to go and do appraisals. They haven't wanted to walk through a house because, they're nervous of the germs that they might catch. We had an appraiser just do one, and he basically just did a drive-by appraisal, didn't even go into the house. And fortunately it came back fine, but that was interesting to us that could even be done. And then let's see, I think that's about it. There's been a little bit longer processing and timeline for closing and title company kind of stuff, but they're still working, and they're considered essential, and so they're still doing what they do. So yeah, we'll see.
Nice, man. Speaking of staying at home and working remotely, how's it been? What are some of the pros and cons of building a business virtually or just remotely, I guess, for you guys?
So for me, it's been fantastic. I'm not gonna lie. So from the Navy perspective, I'm not going in every single day and sitting at the desk in my office. Most of it is being done virtually. I'll go into the office about twice a week, and there are some some websites and stuff like that require your ID card to log into, and so some of that stuff I have to do at work. But for the most part, I've been able to do all my email and stuff at home, which it gives me a little bit more of a leeway to do this real estate stuff on the side. So we've been able to create a lot more content and do podcasts and blogs and do a lot of other stuff that I typically wouldn't be able to do in an office setting where I can get on the phone and have conversations about real estate in the middle of the day, when I typically wouldn't be able to in my office at work. So for me, it's been fine. I'm kind of a introvert anyways. I'm a kind of a homebody. I stay at home a lot on the weekends and just do house projects and stuff. So I've actually been getting a lot done. David, my business partner, on the other hand, super social dude, like always has people over for dinner and always is going and doing stuff, and it's killing him. Like he's like, oh, dude, I'm in a funk. Like I need to like hug people and talk to them, and
Okay,
so,
ideas, Cameron.
Yeah. No hugging?
Not a chance.
All right.
Hey, man, real quick, as we start to wrap up, I got a couple more for you. Tell us a little bit about the name, Storehouse 310 Ventures. Where'd that come from?
Yeah, Storehouse 310 came from a Bible verse, Malachi 3:10, and both of us are Christians, so, and that was really important to us to be kind of at the forefront of that, and that be a part of our business model. Malachi 3:10 talks about giving a tithe to the storehouse, and the Lord says, "Test me in this and see if I will not open up the floodgates of heaven." And so our business model is the first 10% of all of our profits go right back to a charity. And we chose a nonprofit organization called Warrior's Heart. The Warrior's Heart Foundation is a nonprofit that's down in Bandera, Texas. They're a PTSD and warrior healing center. So anyone that has any, so the requirement is that you have to have had some type of chemical addiction, drugs, alcohol, something like that. And it is, proven model. They'll take these warriors in, not only military, but any type of first responder, firefighters, police, anyone like that that's going through a chemical dependency and has signs of PTSD. So they take them in. They're full blown healing center. They bring them in, get them sober, and then it's kind of an alternative way of healing. It's a huge ranch, so you can go. They obviously have like the typical like you know psychologists on station, and the group huddles and the meetings like that. But they also have tons of interactive stuff. They have like a wood shop and a big like metal shop where you can just like go bang on metal and work in there. And they have a bass fishing lake and hunting and all kinds of like really cool stuff. I mean, they're fantastic. Everyone that runs it is a veteran or first responder themselves, and
Cool.
so we have some experience, both some of our classmates, and I flew helicopters for the first 10 years, and I had a squadron mate commit suicide, and we've had some classmates commit suicide from PTSD, and it's real, and it's tough. So it's super special to us, and so that's what we're doing. Is first 10% of profits go to that.
Very cool, man.
That's awesome.
Yeah, love that. Thanks for your service, by the way, and love the fact that you guys are donating.
Yeah, thank you.
Cool. Well,
Good stuff.
yeah, absolutely. So where can some of our clients or listeners find you guys at? Where's the best place to go?
Yeah, so they can go right to our website. It's storehouse310turnkey.com. And, they can go right to the website. They can read all about, who we are, what we do. We post all of our properties on there, and, show, how we analyze the properties. They can click on the contact us page. And we have all the social media channels. We have Facebook and YouTube channel, and let's see, I have a LinkedIn account. I'm pretty active on LinkedIn. We don't have a Twitter account. I'm not a tweeter. I don't know how to tweet. So, but yeah, they can hit up any of those and find us.
Perfect, man. We'll be sure to include those in the show notes, and we'll definitely put a link to Warriors Heart Foundation as well.
Yeah, that'd be cool. Very cool.
Awesome, Stu. Thanks a ton, man. I really appreciate your time and the insight on your business. Appreciate it.
Yeah.
Absolutely. Thanks for having me, guys.
Our pleasure, buddy. Thank you.